Hey guys, how are we all doing? I don't know if you guys can hear me. Well, welcome back to the Rionfx channel. And as always, a stream day. We're streaming CPI live, and you know how we do it always in the community is first to try and understand, what the fundamental is all about. I want to make sure that we can hear me. Okay. First of all, we want to try and understand what the fundamental is about and why CPI is an important release, and also try to place it together with what are the current things happening in the market. And we always want to understand what that is first of all before we go any further, before we even start to look at the charts or any of those things. So first off, why is CPI important? Everybody talks about CPI. CPI is the consumer price index. And the consumer price index, what does it necessarily, or what is its core base? Its core base is to understand the level or the rate of inflation. And what inflation simply is the rate at which the value of a currency decreases over a period of time. Now, inflation is very important, and we also need to understand that inflation is a part and parcel of an economy. It is always going to happen, because for as long as people grow, people earn more, companies produce more, the cost and goods and the cost of production for goods and services increases. Definitely your money is going to have to match it, so that over time can lead to the decrease in value of your currency. Okay, so that's very important to pay attention to, something to take note of. Now, why exactly is CPI important? Because CPI is the consumer price index, meaning that it shows the increase or the decrease in the price of goods and services. Or rather, let's put it in a different term, it shows how much consumers are paying for goods and services. So it means that if consumers are paying more for goods and services, it simply means that what used to be, let's use the Nigerian case, in fact, let's use the Nigerian case and the American case as a study. It simply means that what used to be, sorry, I didn't know my my webcam wasn't turned on all along. Okay, so what used to be um probably $2.50, okay, the previous month, is now being sold for $3.50 or $4.50. Now, basically, what that means here is that the prices of goods have increased and the value of your money can no longer afford you what it used to afford. Now, that's inflation. But if the index shows that people are now buying more with less money, it then simply means that what you can then see a parity coming back into inflation level. So the prices of goods and services are finally meeting up with how much people are able to earn. And why inflation is also very key when it comes to the central bank and making, monetary policies, is because from inflation you can easily judge or try to analyze or tell why exactly you get why exactly people are not able to buy as much, and that would then lead you back to employment rates. So the more employment and the more wages people earn, and if wages increases, then it can then cushion a balance inflation. So all of these things are very key. So inflation is more like a bedrock of most of the decisions that would be taken. I don't know if you guys are following. If you're following, please leave something in the chat section. Let me be sure that you're following. Okay? So inflation is, at that point where you need it to match. It's basically the bedrock, like I said, of every macro decision that is going to be made by the central banks. Okay? So be it the Bank of Canada, the Bank of England, the Bank of the Euro Bank, the ECB, the Bank of Japan, the BOJ, all of this people always pay attention to what they always pay attention to things like unemployment rate, inflation, not just consumer, but they also look at the producer. So that's why you have CPI and you have PPI. So usually there's a correlation between CPI and PPI. If CPI is low, PPI is also going to be low, because at the end of the day, it's an index of price. Okay, it's an index of pricing. So if consumers are saying, oh, we're paying too much for goods, it simply means that producers are also going to be saying what, oh, we are spending more money to produce, hence why the cost of goods are more expensive, and then people have to pay more for it. Okay, you get that. So now let's look at how is CPI important and what makes CPI very important. Okay, what makes CPI very important during this period? Now, what makes CPI very important during this period is not only because it's CPI, but it's also because there's something important also that we need to pay attention to, and that is there has been um what's his name? Trump has been clamoring. Okay, I'll use the word clamoring because that's what he's been doing. It sounds like he's pained. Okay, so Trump has been asking that what, that Powell cut rates. And I think I've explained this thing before. Why does he want Powell to cut rate? It's simple. He wants Powell to cut rate because he's trying to encourage a reign of industrialization again in the US. Now, in order for you to give companies, okay, and would I use the word an appendix, okay, for them to grow and build better, they need loans. Now, nobody wants to take a loan, okay? Nobody wants to take a loan, and I repeat, nobody wants to take a loan at a high payback interest rate. So if anybody comes to the bank and is taking a loan at such a huge interest rate, they are going to want to, run away from it. You get what I'm saying? But now, when you look, okay, when you look at what do you call it? When you look at the rate at which um the central bank has left rate right now, they are 4.5% and they haven't dropped. So he's saying drop this rate so that we can get yields. Why? So that we can get yields at a higher level, and then we can get interest rate at a lower level. So people would do what? People would start to borrow more money, and also that would soften the policies of the economy at that very point in time. So that's exactly why he's pushing. But now, Powell, on the other hand, is good at what he does. He understands the economy. He looks at things. In order for you to choose to rise, to hike rates or to cut rates, you need to look not just only at inflation, but you need to look at other indicators. And remember, I said unemployment is a very important indicator. So he has to look at indicators like employment rate. He has to look at indicators like um, he has to look at indicators like PPI as well. He has to look at indicators as the PCE, because the PCE isn't just anyone, but it calculates, the core expenditures of people at the middle and low level, because those are the people that inflation really affects, not just even those that are high. You get? So he has to look at those people before he can make a decision. He has to look at all these things. Now we're also talking tariffs. The more you impose tariffs on things and people retaliate, the more expensive these imported goods become. Makes it even harder for people to purchase them. So you asking him to cut rates and all of those things, he's weighing his options. So that's why CPI is very important, because CPI this month, the CPI we're seeing is the release for next month. Sorry, for last month. Then the following month is going to be the CPI for this month. But if the CPI for this month is lesser, okay, is lower than expected, then we probably might see rate cuts starting from August. Okay, like remember, Powell already hinted that he might be cutting rates towards the middle of the year, depending on how the economy is going. So if we can see inflation numbers drop, then we most likely will get a possible rate cut in August. Not this month, but in August. Okay, so these are some of the things that make CPI very core and important when it comes to CPI today. So if we get, okay, as always, how to read the statistics. If we get a higher number, okay, if we get a higher number, then it simply means that if we get a higher inflation number, it simply means that inflation is not doing so well, quote unquote. So we might see the dollar start to move to the upside. But if we get a lower CPI number, it's going to give us a hint that, okay, this is signaling a possible rate cut. So we might start to see the dollar, we might start to see that push to the downside on the dollar. So these are the very important things that we need to be paying attention to today. So I have no reason why my trading view is not opening. Very funny thing. But so what we're going to do is, let's use trading view on my browser today. Okay. I'll probably log in trading view on my browser today. I don't know why the app is not opening. Okay, so let's sign in. Let's sign in a bit. That's fair. I mean, I can sign in with this. No problem. Okay, so I have a few pairs that I personally am looking at. Oh no, it's too zoomed in. Okay, so let's do 100%. Okay, so when we're looking at so let me push this higher for ours. Okay. Uh, okay. So I am looking at US30, and I'll break down why US30 for me today. Okay, so on the US30, I've been looking at US30 for bearish moves, and now let's break down how this affects the US30. Okay, so basically, like we said, if CPI is higher, it shows a stronger dollar. If CPI is weaker, it shows that we're going to get those rapid moves to the downside. Why? Why? Always listing why? Because it's going to be signaling a possible what rate cut. And so what are people going to do? People are immediately going to want to start dumping the dollar instead of buying it. Okay, but over time, when we've gotten a lot of orders for borrowing, then we might start to see the dollar get stronger. Now, not only that, but when we look at the US30, the Dow Jones, okay, average index for me, you see that we're at a resistance point, we're at a key level. This key level has held where December 2024, also held in February of 2025, and prices have finally gotten to this point. Now, not only have prices finally gotten to this point, is we just finished an impulsive leg for the past 3 weeks. We're very much impulsive to the upside. Now we also have this level, we have this key level resting just around this area here. I don't know if you guys can see it. Okay, so we have this key level resting here. Now, why is this level a key level? We saw it act as a resistance in March. We saw it act as a resistance in May. We also saw it act as a resistance in June. So remember my law of key level and revalidation. Very good. You see, I'm not jumping. I'm always staying in course with what I want. For those of you that are in my community, I hope you're always learning. Okay, so there's a need for a revalidation of this level. Okay, so you go to the 4 hourly time frame, and then what do you see on the 4 hourly time frame? You want to study what the trend. So now we know where the market is coming from, okay, and we know where the market is at, and now we know what the market might be chasing. Remember, we're all probabilistic at the end of the day. We know what the market might be chasing. So what's the next thing we now want to look out for? Now to study the trend and see if there's anything or a reason as to why the market might act a certain way. So what are we looking at now? We see that the market was previously bullish, creating series of lower highs and higher lows and higher highs, and then we finally came to a point. Okay, so look at this here. So we had highs here, we had higher lows here, then we had another high here. Okay, then we had another high here, like a double top here that failed to break. Then what do we see again? Then we had okay, so now we have a low here. So this low couldn't create a new high. What does that signal? That what prices might be exhausted. Then we had this high here that did what failed to break the new high, and we also had a low. Okay, we also had this low at this point. So now you can see that there's a shift in how the market is moving. Prices have come again to create a new low after breaking the structure here. And then when we go to your 1 hourly time frame, we would see that clearly. You also see, what do we see? We see prices do what? Sweeping this internal liquidity here, and then what, coming into a very good area of what, of imbalance at this point here, and then prices are moving to the downside. Now what's the next thing that I usually would look for? The next thing that I usually would look for is what, at this point in time now, next thing I usually would look for is what, I would then look for a shift, as always, a change in state of delivery. So market was bullish, moving to the upside, and then all of a sudden we had this huge rejection to the downside. Prices have failed to go above this level twice. Okay, so good resistance point here. And also, what do we see? Prices also swept these lows here as well, so it had taken out what, buy sides and what, sell side. So now what we're looking for now is to make an entry on this trade. So I'm just looking for CPI to come out. Okay, I'm waiting for the release of CPI, and if CPI turns out to what, to be positive, then we might get that continuation to the downside. So this is what we are trading for today. So let's go back to Forex Factory. So we have CPI coming out in about 8 minutes. If you have questions, please always drop your questions. I'm always open to answer your questions. Okay, so so let's close. Okay, and let's close. So another thing I want to tell you guys is the dollar is inversely correlated with the index, with the US30 Nasdaq index. Okay, so if the dollar is strong, expect a fall, because what's going to happen at that point in time is that people would, want to, sell off stocks to gain profits, because the dollar is higher. So it means that they can buy more things if they're able to, take profits. Now if the dollar is low, people will buy more stocks. Okay, so now we need to see what exactly the report is before we take our trade. Another trade, okay, that I'm also looking at, okay, is the GBP USD. Okay, so I'm looking at the GBP USD. So see, the GBP USD is at a key level for me. I don't know if you guys remember, I sent out these sells. I sent out these swing sells. This is not my main this thing, so it wouldn't be like that. You won't see my main analysis. Okay, I sent out GBP USD sells from this point. We took the sells from this point, so this was a very good swing. We took the re-entry twice. I hope you guys took it as well. Now we're at this point here, but now the one thing here is a lot of people might be looking for buys at this point, which is fair enough, very valid. But here's something I want you guys to see quickly. You see this area here? Okay, you see this area here? This is a very liquid area, very liquid area. And why this area is very liquid is you can see that the accumulation of buys of all the people who missed these buys here couldn't take these buys at this point, because they kept getting stopped out until market finally did what it did, the sell to buy movement. So it liquidated everybody here, then finally bought. So meaning that anybody who came into this trade took this trade at this point and have stop losses here. Also meaning that the banks as well also have their orders resting below this level as well. So what you're going to be seeing now, I believe, is a liquidation of this point. So if the dollar comes out stronger, then we might see GU tank to the downside and then move up rapidly immediately. So we might just get a sweep of this level and then a continuation of the buys. That's most likely what we're going to get. And if the dollar comes out stronger, then we're most likely going to have to slow down a bit on US30. Okay, but on US30 now, it moves very rapidly. So what we're going to be doing is we're going to be betting on the one trade that has given us the cleanest price action, and for me, that's US30. US30 has given me the cleanest price action so far, and so I'm sticking with that. So what we're going to be doing on US30 right now is we are going to be, this is the first time that I'll be giving us a trade just before the news. Okay, so what we're going to do on this trade right now is we're going to be risking 21 pips, okay, on US30, because it's at the best possible entry that we can get it at right now. So I'm just going to drop the signal right now. Okay, I'm going to drop the signal right now for US30. So we're going to place sells. We're going to go easy, okay, not too much risk. We're going to sell US30, and we're going to have our stops at, it depends on on your broker. Some brokers, their prices might be different. I've noticed a discrepancy in prices in different brokers when it comes to indexes. So watch exactly for where my stop loss marker is. Okay, you want to watch where my stop loss marker is and use that, okay, as a possible place for where your own stop loss is. But my stop loss right now is at 44670. Okay, 44670 is my stop loss. Okay, 44670. Okay, that's my stop loss. Then my profits. Okay, so we have profits. We have profits one. Okay, my profits one is going to be at 4412. Okay, 4412. 4412. Okay, so let's do 44120. Okay, then my profits two is going to be at 43900. Okay, we'll do 43900, and then profits 3. Okay, profits 3, we do 43500, and then longer TP, we look for 4300. Okay, longer TP, we look for 4300. Okay, so I am sure that we can all see this boldly. Let me see if I can wrap this text. Okay, so I'm just going to put this up here and let's anchor it. Okay, so let's watch and enjoy. Okay, so let's go back. We have, so I hope you guys are taking the trade. Okay, so we have 1 minute. Okay, so we're looking at US30. I also had an analysis on GBP JPY for the buys. So I just took my trade. I just took my trade on US30. Okay, so we have 1 minute. So what we're even focusing on the most is the core CPI. Okay, so forecast is at 0.3%. You know, so let's see what happens. So we want to get a lesser number all through, and that would, you know, that would short the dollar by force. But if we get a higher number, that would strengthen the dollar, meaning that the signaling a kept rate or a possibility of the rate staying the same. So you can see the markets are shaking right now. Let's see. Okay, let's look at the XY. Okay, what's the XY doing? The XY seems to have taken a market is still pending, no release yet. Okay, that's Canadian. 0.2%. CPI is at 2.7%. That's a stronger dollar. So inflation went higher than expected, and we want inflation to come down, remember? But now inflation is higher than expected. So what's the first thing that's coming to people's mind? A stronger dollar. So we're starting to see that there's probably going to be no rate cuts. So now people are going to start thinking, you know, what's happening next? He probably is going to keep rates normal, or is going to hike rates normal. So let's see what the XY is doing. Why is this the XY looking very... Let's open TVC. Okay, so look at the huge the huge candle coming to the downside. Okay, so just stay calm. Don't rush into it. Remember, it's just 130. I always tell you guys this thing is 130, so don't rush into the trade. Okay, don't rush into the trade for any reason. Just stay calm with your trade. We're on the right side, so the dollar is stronger, so we should be expecting to see the US30 actually sell off. Okay, so market is pulling down, looking like it's going to go, but just watch and see. Okay. Inflation picks up again in June, rising at 2.7% annual rate, and now that's crazy because we're not expecting that. We want lower rates to finally get a rate cut, so signaling us that we still might not see a rate cut next month because Powell wants to keep rates under 2% or at least 2.2%, and we saw inflation drop. Okay, we saw inflation drop from how much? We saw inflation drop from where? From we saw it go from 2.4%, which was the lowest it was at. That was as at April, 2.4%, and now we are coming in June at 2.7%. So we see that there's been an increase of 0.3%, which automatically is not like the most healthy thing that Powell would have wanted or is looking for at this point in time. Okay, so let's see. Let's look at the charts. Okay, let's look at the chart. So we're still our US30 trade. The stock exchange market usually opens by what? By 2 p.m. our time, 2:30 p.m. our time. So let's watch and see the reaction we're going to get. So let's look out for these highs. Okay, let's see where did these highs come from. Let's see, this highs was 5 o'clock this morning, 6:20 this morning. This was London. So we have closed towards the end of Asian session and London session at the same point. So probably a good place to manipulate the highs before it drop. But let's watch and see. So that's why we have our stop loss at the safe zone, and just at 20. How many pips? At 220 points, which is 22 pips for some people. Okay, so these are a few things that we want to pay attention to. Let's see, is there anything so high to come back up here to if we've already filled up the imbalance? Okay, so fair mitigation block at the top here, if at all it wants to come this high. This is the max it might come, if at all it wants to come this high, but I doubt it would because we've gotten a first push into the imbalance already, except it chooses to use hold completion. Okay, so the XY dropping. So let's look at GBP USD. What's GBP USD doing at this point in time? Okay, looks like it's trending higher here. But when you look at it, I want you guys to pay attention to something. When you look at these buys that GBP USD is doing, I want you to look at the trend. Focus on the trend. Look at where the market is coming from, and then look at this push here. You can easily tell that this market is corrective. It's not continuative. I'll take it again. You can easily tell that this market is corrective, not continuation. Corrective in what sense? Look here. Break of structure. What's happening here? A return to what? We need to see that correction. And where the prices just enter this zone. So if I want to take a risk on taking this trade right now, I would be more focused on what? On the sells than the buys at this point in time. the market has not proven itself to be bullish yet. The market has not proven itself to be bullish yet. The market has not proven itself to be bullish. If this market gives me one bearish confirmation at this very point in time, of which I know is going to, I'm going to be bearish on it. So I just need the next 30 minutes to prove bearish. I want to see prices fail to break below above this level and stay bearish, and I'm going to call GBP USD sales. Like I said, I'm more focused on what? The liquidity at this level. Remember, I have 3 rules when I'm trading. Where's the market coming from? Where's the market going to? And why is the market going to where it's going to? So liquidity is what attracts the market. That's the magnet of the market. Where it is coming from gives you an idea if it's coming from a supply or if it's coming from a demand. Where it's going to tells you the present trend of the market, if you're bearish or you're bullish. See those 3 things? Never play with them. They should always be at the back of your head. Like when you wake up in the morning and you come to the chart, always ask yourself these 3 questions. Where's the market coming from? Where's the market going to? And why is the market going there? So the why is the liquidity, the where is your trend, the from is your key level, if it's coming from a supply, if it's coming from a demand. So a lot of people have jumped into buys now, and guess what? They are suffering the heartbreak because why? They don't know how to read these fundamentals like we do. See, for as long as you're always joining my live sessions doing fundamentals, I want you to always beat your chest and tell yourself that you know these fundamentals. Like every time it's CPR or NFP, say it to yourself within your chest, I know this thing, I know this shit. You get me? Have that confidence in yourself. Have that confidence. Can you see the sales? Can you see the aggressive sales? Why? Because they rushed into the market. Can you see our sales coming back? So we sit and we wait for this market to go in our direction by the special grace of God. Okay, so let's watch and let's see. Okay, what would have really moved this market? What would have really moved this market here is if when prices got to this point here, the next thing that we heard was, inflation had dropped to probably like 2.3% or 2.2%. That would have been massive. Like you would see the whole dollar, it would just tank aggressively. You saw the way the last NFP was. You saw that candle. That's exactly what we would have seen on the DXY. Okay, so no panic. Okay, let's experiment. There's no need to rush it. Okay, guys, I'm thinking of taking GBP USD. Ooh, can you see that? Can you see that? Can you guys see that? Can you guys see this? Can you see that candle? This is clean. This is about clean 30 pips move. Can you see that candle? Pay attention to the market. Pay attention to, can you see this candle? Pay attention to the market. Can you see it? Can you see it? I told you, this is not a bullish move. This is a corrective move. Can you see I came into this zone? Can you see I came into this zone? I'm not even worried or, in any way if you did not take the trade or not. But I hope you are learning. I hope you are learning. Okay? As much as I want to show you guys and give you guys the food, I also need you guys to learn how to fish. Can you see? Can you see where it's important to pay attention? Don't just jump because the XY is jumping. The news can be very manipulative. You need to decode it properly. So everybody telling you they are trading fundamentals, use your sense, be careful. Okay, so now what did I tell you guys that I was waiting to see? What did I tell you guys I was waiting for? I was waiting for what? A bearish confirmation. And what's that bearish confirmation? What's the bearish confirmation? I always pay attention to a change in state of delivery. Have we gotten that change in state of delivery? Yes, we got that change in state of delivery exactly here. Why? When you go to the 1 minute, you see that this was where these buyers came from, and this market took delivery from here as buyers. And what happened? We had that change here. So what's the next thing I'm looking for? I'm looking for what? For a return back into this area, and then what? And then I strike for the sales. My stop loss still above this level because this is the main level. So prices could still come up here and play a bit before eventually selling off. So what did we use? What was our reason for? What did we use to analyze this trade? What did we use? Those three major things. Where's the market coming from? Where's the market going to? And why is the market going to where it's going to? We obviously can see the liquidity resting, so it's obvious that the market has to come here because this is where the most money is resting. If I make these things easy for you, okay? Do I make these things easy for you? Are you understanding it? Do I make it easy for you? These are literal free classes I always give you guys. Okay, so we're looking for that push back up, okay, and then we go in New York session. Okay, so we're going to be looking for sales on GBP USD as well. So just in case, I don't know if you guys can see my screen, but you can see this is my US30 trade. Can you see it? This is my trade on US30. Taking my trade already on US30. Okay, you can see it. You can see. If you guys can see it, okay. So this is my trade on US30. Okay. So we're watching. So we're going to be selling GBP USD. Okay. Let's use 1.34500. Okay. So we're going to use 1.34500. 1.34500. Okay. So we're going to have limit order. Okay. So we're going to have a sell limit at 1.34500. Okay. And we're going to have our stops. We're going to have our stop at 1.34800. So we're going to use a safe stop loss, but a good stop loss that would not take us out of the market, you know, off and on. So we're going to use 1.34800 as our stop loss. Okay, 1.34800. Okay, and then we're going to have our profits. Okay, we're going to have profits at 1.34, sorry, 1.33700 is where we're going to have our profits. 1.33700. We're just going to go long. Okay, we're going to go we're going to hold this trade for a while. So we're going to be risking about 25 pips to target about 90 pips. Okay, about 82 pips. So we're going to be doing a 1:3 risk to reward. Okay, so let's keep this here and then let's anchor this here on GBP USD. Okay, how's US30 going? So US30 sales are finally coming back in. If you guys took the trade, say you took the trade, okay, so let's send out the trade on the group. Okay, I believe we anchored this here as well. Okay, so let's send out the trades. Okay, and let's add GBP USD as well. Okay, so let's watch and see. Okay, no pride, guys. Just stay humble with the markets. Okay, all we are nothing but spectators and pencils in the hands of the market. The market can choose to do anything it wants to do, but the most important thing is be confident in what you know, because at the end of the day, what you know, the confidence in what you know comes from your ability to have seen it produce results. And anything that can produce results means that over time you can scale those results up. So let's stop jumping. Okay, stay with it, stick with it. this, you guys should tell GBP to please go back into our zone. Tell GBP to go back into our zone, guys. Where is GBP going to? Guys, I don't like what GBP is doing. Please tell it not to act like GBP Because if it was GBP is gone. Like, you're not catching it again. As much as I love GBP that pair is a literal devil. Like, the moment you miss the entry, it's gone. Like, you're not coming back for me. There's no coming back for you. It's not giving you an entry. None of those things. It's going straight. It's going straight. So I am setting my limit for GBP now. Okay. Are you seeing what GBP? Oh my god! It better go back. It better go back. It's not making me feel like 500 is a bit far, but I'll stick with it. I'll stick with 500. Okay, and we have our SL just. We have our SL where? 34700. Was it 347? 34800. Okay, we have our SL 34800 just right above the main key level. Okay, so let's watch, guys. So, okay, I hope you guys can see it. So, see, I have my limit and my trade running. The Canadian CPI too was higher by 0.1% as well. So, might see a very shaky USD card. Let's see what USD card looks like. Okay, so let's see what USD card look like. USD card might be ranging crazy now. Let's see. I told you. see the buy and sell. Crazy range. Aside their present tariff issues as well. Look at how choppy the 15 minutes look. So you see, so right now nobody has strength, nobody has weaknesses. Both of them are suffering literally the same thing. See how they are stuck in a range. See pairs that are very tricky to trade sometimes. USD card, Euro GBP. Those two pairs are drag pairs. I like to call them drag pairs because when you trade them, you're trading basically the strength of both currencies between the USD and the Canadian dollar. So you want to view them. And if you're on this call and you still haven't subscribed to my YouTube channel and you've come this far, please hit the subscribe button. It wouldn't cost you a lot. It's your own simple way of saying I appreciate you. Okay, if you've not shared my YouTube to any of your friends before, please pick your best video that you've watched and share it to your friend. Share it to somebody. Let's grow. There's no rush. There's no need for too much this thing. Just presents calmness and safety here. Okay, so just share and let them come on the live, enjoy themselves, learn a thing or two, catch a few trades, catch some peeps, and make money. Okay, so we're waiting for 2:30. As always, my streams are for an hour long. I haven't had anything to eat, so I need to make something. I'm in the mood to cook. I can't be cooking only on the chat every time. Don't mind me, guys. But yeah, please don't forget to share. Don't forget to like. Don't forget to subscribe. Don't forget to manage your risk. Don't forget to manage your risk. Okay? Don't forget to manage your risk. So I would see you guys by 2:30 on the channel, and I'll give you guys updates on the trade. And yeah, stay safe. Don't over leverage. Don't double down on your position, and as well, don't try to scale in too big. Stay level headed. Okay, times are tricky out here. Protect your capital. And for those of us who have not registered for the competition, people are already climbing themselves. I can see a lot of people, you know, I can see someone already sent me his position on the leaderboard from our community, and he was number 20, I think, coming from number 180 something or so. So you guys can do it. And yes, for the prop firm Neoma, we're still going to do it. Okay, I haven't started trading it yet. You have to, be calm, relax, and enjoy and understand what you want to do first. Have a plan. Every time you get a prop firm, always have a plan for what you want that prop firm to do and how you intend on passing it or trading it. Don't just trade it anyhow because you just want to trade. No, have a plan. Get a structured risk pattern that you want to use. And if by any reason you fail the prop firm, you know that you had a plan, you were disciplined, and you stuck to it, and it didn't just work out. That way you'd forgive yourself easily. But you see, when you self-sabotage by not doing the right thing, it's harder to forgive yourself. Okay, we're waiting for GBP USD to buy back into this level, and let's take the sells. I know a lot of people are buying, but they'll be all right. Okay, guys, so I'll see you guys by 2:30, and as always, it's Ryan for a reason, baby. And now God get power past everybody. Okay? So I'll see you guys 2:30. And cheers, guys. Love you all. Oh my god.
God. They think I learnt this shit in one day. For some way one head they do.